All right, welcome back to another episode of Asset Coach and Tax Strategist. I'm glad you're here. So you've been spending the last few episodes with us talking about Berkshire Hathaway, Warren Buffett, Charlie Munger doing their shareholder meeting and going through the questions that have been were pre-written and then also audience questions. But oddly enough, yesterday, November 28th, Warren Buffett's partner, Charlie Munger, passed away. And so this episode is in honor of Charlie Munger. Let's talk about Charlie for a little bit and who he was, what he meant to Berkshire Hathaway. And then let's also look at what Berkshire Hathaway looks like because of this relationship and partnership. I'm not going to profess to be a historian of Charlie Munger. So there may be things in here that I may be incorrect. I apologize. My main point here is to honor Charlie Munger and his mind combined with Warren Buffett's, what they've been able to accomplish, and present to you and I as a pathway of how or what to do with money, more precisely, how to get capital to become more capital. We'll talk about this later, and that's what we've been talking about in our last few episodes. So let me go and share my screen here and go through and just kind of get an idea of who Charlie Munger was. So it was vice chairman of Berkshire Hathaway. Net worth was about 2.6 billion. So had a substantial net worth himself. He was among the billionaires. He wasn't one of the prolific and the outspoken billionaires like Warren Buffett. Very, very humble. In fact, Warren Buffett tends to get a lot of the media time that Charlie doesn't. But Warren always credits his success, his friendship, and their experiences, and includes Charlie in that. So Charlie Munger was the vice chairman of Berkshire Hathaway and Warren Buffett's longtime friend and business partner. And Omaha native, actually, Munger left the University of Michigan to become an Army meteorologist during World War II. He later earned a degree from Harvard Law School and met Buffett at a dinner party in 1959. He joined Berkshire Hathaway in the 1970s. Okay, and this is all coming from Forbes.com. At the time of his death, Munger served on Berkshire's board as well as the boards of newspaper publisher Daily Journal and the retailer Costco. So like Buffett, he was known as a pragmatic investor and an active philanthropist who lived relatively frugally and gave millions to different universities. And you can see a little chart of his net worth, and they're starting back in 2014, but he was billionaire number 1368. So there was 1,367 billionaires before him, and he's at 2.6 billion. So good for him. Self-made, worked hard, rolled up his sleeves and worked hard. He had 8 children. He had a doctorate at Harvard University, and he dropped out at University of Michigan to join the Army for World War II. He actually, fun fact, he actually worked at Warren Buffett's grandfather's grocery store in Omaha, earning $2 for 10 hours of labor. So way back then, a dollar was a dollar, unlike today. But interesting connection, I thought. He quotes, this is one of his many quotes: "If you don't learn to consistently revise your earlier conclusions and get better ones, you're like a one-legged man in an ass-kicking contest." so pretty comical. So let's go on and let's take a look at him a little bit deeper here. Some of this is going to be repetitive. So he died. What did he die of? He's 99. So does it really matter? He was 99. He lived an amazing life. Let's see here. Let's go look at some background. He was born in Omaha. We talked about, dropped out of the University of Michigan to become a meteorologist in the Army during World War II. Later got a law degree at Harvard. He moved to California after graduating from Harvard in 1948. That's when California was booming and was the place to be, and practiced real estate law before founding his law firm Munger, Toils, and Olson in 1962. where he then managed investments as a hedge fund. He also founded that year called Wheeler, Munger and Company. So here's the interesting thing. He was doing what Warren Buffett was doing, just not together. Munger met Buffett they met at a dinner party in 1959 and had worked at the grocery store again. Now, in 1975, Charlie Munger had closed his hedge fund. And then 3 years later, he joined, became vice chairman of Berkshire Hathaway. Okay. In 1972, before he worked at Berkshire, Munger had convinced Buffett to sign off on the conglomerate a $25 million purchase of See's Candy, despite the candy company's pre-tax annual earnings of $4 million. This was a big deal back there. That was a big purchase. That was a big. Now, it's interesting when you read some of Warren Buffett's other books that have been written about him. They do talk about this and how this was an odd thing. But remember, Charlie Munger had ran a hedge fund. He knew investments. He knew businesses. In fact, he's the one that suggested Berkshire Hathaway buy Westcom, a bank in Pasadena, California, and really given them the idea and the clue to understanding the beginnings of how to use capital. Okay. Now, See's Candy has made Berkshire Hathaway over that period of time since 1972 to now well over $2 billion in sales. So just selling candy, not bad. Now, if you're on the East Coast, you may not be so familiar with See's Candy. See's Candy was a West Coast thing. I know on the East Coast, they have different types of, there was another big candy company back in the East Coast. The name's I'm missing the name, but that's right. Not important here. Now, Buffett reportedly credited Munger with Berkshire Hathaway's approach to investing. Think about that. Think about that. Okay. Buffett reportedly credited Munger with Berkshire Hathaway's approach to investing. Now, Warren Buffett was already a successful investor. He had started a partnership. He created, he invested in businesses. He used Ben Graham's, was a student of his, and he used his methodology and was very successful doing so. But I think when the two became one is when now you have two minds working together that have a similar idea and thought process, and you can see how 1 + 1 = 2. It actually equaled 4, 5, 6. They've been able to do more than they ever would have done individually. Now, here's the thing. One of the things you'll always hear me talk about in anything we discuss is the focus of how to get assets to work with each other. Okay. Now, this is an important distinction right here. Okay. Is that when you have two separate assets, what's an asset? Something that creates income. That's the financial definition. Okay. That's Robert Kiyosaki's definition. So what creates income? Charlie Munger, Warren Buffett. Their minds are assets, just like yours. As a business owner, you are your business's number one asset. Your job is to hire other assets, employees, people, to where you take these minds, these assets, you work them together to create another asset, which is your business. Real estate, investments, all these other things. Okay. Assets are best used with other assets to continue to create more assets. That's the point. It's like a cell doubling. Okay. It evolves, it grows, it becomes something that you really can't runaway train. You can't stop it once you get it going. I want to make sure that I lay that out as a very important distinction here as we go through this, because Warren Buffett is saying, my buddy, asset buddy system, that old commercial, my buddy, he's a big key to all this. The blueprint he gave me was simple. Forget about what you know about buying fair businesses at wonderful prices. Instead, buy wonderful businesses at fair prices. Okay, so that's actually pretty important. Let's repeat this. Forget what you know about buying fair businesses at wonderful prices. Instead, buy wonderful businesses at fair prices. Very important distinction. And what is part of their wonderful formula? They have a formula that they lay out. It's not just about the finances. That makes it a fair business at a wonderful price. He's talking about a wonderful business at a fair price. He's talking about what is made up of this. Why is this business successful? And we're not talking about revenue and profit, essentially, or the numbers, a $60 billion company or a $2 billion company. They're talking about wonderful businesses at fair prices. That includes management. It includes product and supplies. It can and vendors, the necessity or the need or the demand of the particular product or service. Okay, very, very important. Now, at Berkshire Hathaway meeting in 2017, a highly anticipated event that draws thousands of people, Munger shared his insight with investors, saying, I have a friend who says the first rule of fishing is to fish where the fish are. The second rule of fishing is to never forget the first rule. We've gotten good at fishing where the fish are. Okay? Parables. We teach in parables. So let's look at what their fishing has been. Now, this is the exciting website, official webpage, homepage of Berkshire Hathaway. I know, fascinating, absolutely intriguing. Every marketer out there is crying right now saying, oh my goodness, how in the world are you doing this? Look at this website, bullet points. This is an executive summary. This is what this is, folks. This is not a website. This is an executive summary. They're giving you insight to what they have done. So a message, reports, filings, letters from Charlie and Warren, all their letters. We're going to go to the Berkshire Hathaway subsidiary companies, corporate governance, everything. But look what's down here. I find this to be absolutely fascinating. Hey, if you need car insurance, click here. I love it. I absolutely love it. On their website, they are still selling insurance from Geico. Oh man, I love it. So anyways, you can go through their annual meeting information releases. This in itself is a treasure trove. Okay. Now, Charlie Wesco, right here where you see that Charlie's letters to Wesco shareholders, Wesco is a bank that Berkshire Hathaway purchased, and Charlie was very integral. This was on the West Coast in Pasadena. This is what basically helped understand the use of capital. What do banks do? Lend out money. What are you lending or borrowing money for? To build wealth, to leverage, right? To buy what we would consider assets. Now, we misinform or misunderstand what assets are. There's a lot of people call their physical home, their residence, private residence, an asset. It's not really an asset. It's a liability because it doesn't create you income. If you look at if the basis of an asset is to create you income, now the moment you sell it and you have money from that sale, it's an asset. If you use or tap into the equity in that house to purchase another asset, your house could be an asset. But most people's homes, they consider an investment an asset is actually a liability. Now, if you don't use the equity, what's the rate of return on the equity? Zero. The equity doesn't earn anything. Now, the house appreciates, but it doesn't earn anything. So if you were to put $100,000 in a savings account, oh, I've got a savings account. But what do you want that savings account to do? Grow. You want the equity to grow, the 100,000 to grow. It doesn't happen in a house. The house appreciates, but the equity doesn't do anything on its own. So anyways, well, that's for a different conversation. So I think it's very exciting. So let's go to Berkshire Hathaway right here. Here are what they have done with their partnership. Look it. Most of these companies you've probably have never heard of, but a lot of these you probably have. So Ben Bridges Jewelry. Yeah. Okay. I've heard of it. Justin Brands. Benjamin Paint. Okay. Here's insurance companies. Berkshire Hathaway has 10 insurance companies, by the way. More. Borsham's Fine Jewelry. So 2 jewelry stores. Competitors. If you remember the old malls? What were there's always 4 corners when you walked into the mall, right? You walked in, there was a box retailer right there, and then usually an alleyway with all the other stores, right? And there's these 4 corners, kind of like an intersection on a road. What was usually in the 4 corners? Jewelry stores, right? There was always jewelry stores, just like gas stations on the corner of a intersection. Okay. Let's see here. Brooks, here's the railroad company. Business Wire, it's a news outlet. Indemnity company, charter brokerage, Clayton Homes, so manufactured homes, court business services, Duracell batteries, flight safety, Fruit of the Loom, right? These are all companies, not all these Helzberg diamonds. So we still see those commercials, right? We don't see Helzberg diamonds on commercials and it say Berkshire Hathaway diamonds. No, they buy companies and they leave the companies as they are. They only use the Berkshire Hathaway name to improve that. So that's why you see Berkshire Hathaway Automotive, direct insurance company, right? They specifically do this because they want people to buy the insurance. Okay. Let's see, metalworking company, Johns Manfield does a lot of furniture, Kraft Heinz, energy company. So very, very interesting. NetJets, Oriental Trading Company, if you ever bought a lot of stuff from their little magazines. More furniture, See's Candy, more furniture, more insurance, a trucking company. So as you can see, they have a lot of product and services. They own a trucking company. They own a railroad company. So they have an energy company, right? So they've done a very good job as a holding company to balance out this portfolio. If you're an investor and you want to invest and diversify your money like a mutual fund, you would be best to own Berkshire Hathaway stock than a mutual fund because they have a specific proven record that they actually own the companies versus mutual funds own a portion of the companies. They're limited to how much they're supposed to own. But this is pretty interesting when you look at this and what they've been able to accomplish and do. Now, Charlie Munger has been with Westco Financial since the 1970s, the 1997s, and ended in 2009. Okay. And so, but it's all historical documents. Look at that, from 77 to now, his letters to the shareholders. Okay. I mean, this is it's amazing. It's amazing what's here. Just a ton of stuff here. So anyways, I don't want to bore it, but I just wanted to say, Charlie, thank you so much for being part of our world, allowing us a pathway, a roadmap, a blueprint out as to what's the way to create capital. We call it cash flow. But the reality is your cash flow created capital, gave us access to create more cash flow, meaning more capital with other businesses. And so thank you so much to you. I know Warren Buffett is probably having a very difficult time right now, as long as your friendship has been, and partnership just from all aspects of your guys' life. But thank you so much, and may you rest in peace. God bless you, Charlie.